My view is that this is a hiccup and not a reversal in trend. But the thing I love to tell people, you probably get this all the time. When crypto is ripping and it's new all-time highs, everyone's telling themselves, I wish I got in at X. And if there is just a market pullback to X, I will invest. All too often over the last 7 years, I've seen people make that promise to themselves. But then when the market pulls back, they don't actually act and get in as they said they would. And so the only thing I would say to folks is like, look, if you underwrote crypto a few days ago when it was Bitcoin 108,000 and ETH 4,000, and you said, I'm just going to wait for a small pullback to get in. If that's the case and this is the pullback, maybe it is time to act on that. And if you're looking for more of a pullback, maybe you should write down the number at which you would be happy entering this market. These pullbacks can be gifts, but they can disappear as quickly as they appear. So I would just encourage people to keep that in mind.
Hougan opens by acknowledging the sharp pullback in crypto prices. Ethereum and Bitcoin have seen corrections from their recent highs of $108,000 and $4,000 respectively to levels still well above historical lows. While this pullback might seem concerning to some, Hougan emphasizes that it represents a natural reset rather than a reversal of the broader bullish trend. This phenomenon, he explains, is typical of the crypto market. Rapid price increases often lead to corrections fueled by leverage positions getting wiped out. A staggering $1 billion in leverage positions has been liquidated over the past 24 hours, triggering cascading sell-offs. However, this isn't indicative of a fundamental weakness in the market, but rather a cleansing process that strengthens the system.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This is a sharp pullback, right? We were up around 108, now we're down at 96. But if you step back, 96 is still a pretty good place to be. A few months ago, we were scuffling around those all-time highs, around 70K. So now we're well above that, sort of establishing our position around $100,000. I continue to think this is more of a short pullback than a reset of the bull market. The underlying themes are still very strong in this space. I'm sure we'll get into it, but for sure, the market's come back a little bit. I do think something important has changed in the crypto market, which leads me to believe that this will stop sooner than it might otherwise. And that's we've chopped off sort of the left tail of crypto returns. I think previously, a few years ago, if we had a big market pullback like this, you'd start to see the news stories about, is this the end? Is crypto going to zero? Is it all over? I think those have been well and fully put to bed, right? Remember, we now have folks like BlackRock in the ecosystem. We have Wall Street firms building on ETH. We have multiple positive drivers. So I think there's more of a cushion under ETH than there used to be. And I'd be surprised if we pulled back significantly from here. There's been a lot of building around this area. And, I think the long-term trend is up. We're still confident in our 2025 prediction, which sees ETH go above $7,000 by the end of next year. So I think all of those trends remain intact. Yeah, the trend is still intact. Our favorite momentum indicator, are we in a bullish trend or in a bearish trend, is looking at the 10-day exponential moving average price versus the 20-day exponential moving average price, which is just a math-based way to tell you if the market is ascending or losing momentum. Right now, that trend is still on. It's still telling you to invest. We'll see if that's true tomorrow, the next day. But until that reverses, that's sort of like my first signal that I should start paying attention to this pullback, that it may be more extended than I otherwise expect. Right now, that signal still tells me it's a bull market. I'll update on Twitter when that changes. But right now, the bull market is still on from my favored momentum perspective. My view is that this is a hiccup and not a reversal in trend. But the thing I love to tell people, you probably get this all the time. When crypto is ripping and it's new all-time highs, everyone's telling themselves, I wish I got in at X. And if there is just a market pullback to X, I will invest. all too often over the last 7 years, I've seen people make that promise to themselves, but then when the market pulls back, they don't actually act and get in as they said they would. And so the only thing I would say to folks is like, look, if you underwrote crypto a few days ago when it was Bitcoin 108,000 and ETH 4,000, and you said, I'm just going to wait for a small pullback to get in, if that's the case and this is the pullback, maybe it is time to act on that. And if you're looking for more of a pullback, maybe you should write down the number at which you would be happy entering this market. These pullbacks can be gifts, but they can disappear as quickly as they appear. So I would just encourage people to keep that in mind. Crypto can't blame the ETFs for this pullback. They've been buyers. They can't blame MicroStrategy or the Bitcoin miners for this pullback. They've been buyers. The drivers of this pullback, are either crypto native investors or more specifically leverage, right? We've seen $1 billion in levered positions be blown out over the last 24 hours in crypto. If you want to point the finger at someone and say you're driving this pullback, it is the levered positions that have built up in the crypto market. And that's, of course, a story as old as time. Almost every crypto pullback in history of any size starts with a news issue that moves the market a little bit, and then you get cascading blowouts of levered long positions until you bottom out. That's just native to the crypto community. That's exactly what's going on now. It's not a fundamental retracement. It's a cleansing of leverage in the system. And ultimately, that puts us in a stronger position. But it is painful and it can continue for a while. It's pro-cyclical, to use the term. And I think that's really what's driving this. It's not the ETF flows, which are positive. It's not the corporate buyers, which are positive. It's not the governments, which may be positive. It's levered investors in crypto. I think corporations are a big source of demand. They bought 250,000 Bitcoin over the last year, and that seems to be accelerating. 250,000 Bitcoin is more than all the Bitcoin mined, right? I think there are three major new buyers of crypto, which is corporations, ETFs, and governments, and they're each very important. As regards to, I don't think MicroStrategy's built up enough leverage to be any sort of systemic risk in the system. I think those fears are overblown. I worry a little bit about some of the sort of MicroStrategy copycats that may not be as careful as MicroStrategy in this space, but we're still early in this trade. Those are properly thought of as long-term sinks for Bitcoin at this point. There may come a point where maybe not MicroStrategy, maybe others become points of concern, but I don't think that's the unwind we're seeing. The unwind we're seeing is, retail speculators, is my guess, who levered up with the sustained bull market post-election, and now they're getting blown out, and that's a natural part of what happens in crypto.
Hougan also sheds light on specific assets like Ripple XRP and Solana. XRP, once overshadowed by regulatory challenges, is experiencing renewed interest due to its low-cost operational model and unique use cases like stablecoin issuance. Solana, on the other hand, stands out as a comeback story with strong user experience, innovative tokenomics, and high staking yields. Both assets exemplify the diversity and resilience of the crypto ecosystem. New institutional investors, Hougan notes, are likely to adopt a pluralistic approach, diversifying their portfolios across multiple cryptocurrencies rather than adhering to tribal loyalties.
I think the strategic Bitcoin reserve is not priced in any way in the market right now. I think if the US legitimately goes into the market and buys 1 million Bitcoin, triggering other governments to go in the market and buy their own 1 million Bitcoin, I think the price of Bitcoin is more at like $500,000 or $1 million than it is today. So I think the market is relatively honest with itself that that's a low probability event, or it would be much higher than we see, right now. Mostly, I think, again, this is a market that ripped from $70,000 to $108,000. That is a huge increase in market capitalization. It's a huge percentage move over a very short period of time. I think this is probably a natural reset. And of course, it's amplified in the altcoins, if you want to call them that. It's amplified from everything from ETH on down, which had truly spectacular moves and now are resetting. I mostly think it's just a natural reset. I think there's substantial demand actually, and substantial interest in Ripple and XRP. I think people are looking at an asset and a blockchain that a lot of crypto writes off as like a vintage 2017, hasn't really done anything. But there's an outside perspective that through an extended bull market and huge regulatory pressure, a community and a blockchain, which is extremely low cost to operate, has persisted in having interest. And it's now sort of unshackled to some degree from that regulatory threat. And it's starting to do things that are interesting in the market, like roll out its own stablecoin. That's not a guarantee that it will be successful, but there is a really, probably to someone who's crypto native, a surprising degree of interest in XRP and what Ripple is doing, and a surprising resonance with mainstream investors. So I think that one is probably underhyped in the crypto community compared to what the outside world thinks. I think that they're interested in Solana as well, right? Solana is a great comeback story. It has enormous momentum. It really does have a good user experience that resonates with people. And I think they're interested in that as well. Again, I think crypto investors in the year ahead, particularly the new investors who are coming in, are going to be sort of plural investors. I think they're going to want broad-based exposure to multiple crypto assets. I don't think it's quite as tribal as it is within crypto. I think sort of the net new money coming into crypto is much less tribal and community oriented and much more industry oriented. So you're going to see them making bets across the space. That staking is really important in the Solana ecosystem, right? The way that protocol is designed and the way its tokenomics is designed, stakers earn a remarkably high yield compared to many other chains. And so there was significant demand for an ETP that has access to staking rewards. I think what you'll see in Europe is a demonstration that ETPs can successfully stake and can navigate the liquidity issues that surround that through inflows and outflows. So it would be a great proof of concept to US investors who, of course, can't access those markets. They're closed to them. And I think hopefully it informs what high quality crypto asset managers do here in the US. In the end, ETFs, ETPs are supposed to help retail investors and other investors access opportunities at the same level as institutions. And those institutions want exposure to staking rewards. I think every investor should have exposure to staking rewards. So I hope, what we heard in Europe is we want sole staking rewards in an ETP format. We definitely hear that in the US as well. That can now be served in Europe, which I think is fantastic. And hopefully it can be served in the US at some point in the future.
Staking is emerging as a critical aspect of the crypto market, particularly for assets like Solana. Staking allows participants to earn yields by locking up their tokens, incentivizing long-term commitment and network stability. Hougan highlights the growing demand for exchange-traded products that provide exposure to staking rewards. While such products are already available in Europe, regulatory barriers in the US prevent similar offerings. Nevertheless, Hougan remains optimistic that the success of European ETPs could pave the way for their adoption in the US, providing retail investors with access to staking opportunities on par with institutions.
Please like and subscribe my channel.